we are going to be talking about time frames. It is a question that I get asked almost every single day when a new trader signs up to TradeCaster. They say, what is the correct time frame to trade in? How do I know if I should be in a 1 minute? Should I be in a daily chart? Should I be in a 5 minute? Should I be in a 60 minute? How do I know what to look at? How do I know to be able to say, oh, that's support or that's resistance? Let's make it easy. Let me break it on down so at the end of this, you know exactly how to be having your charts set up so that you are going to be able to have the most predictable stock and the strongest movement from the areas that you can find. Because if you are in the wrong time frame, you could be putting the wrong support, the wrong resistance, and then your entries and exits always seem to be wrong. So time frames are crucial and a lot of people overlook them. So let's make sure that you understand absolutely everything here. So what are time frames? Time frames are different settings where you can adjust your trading chart and see a specific stock in that set time frame. Each candle on your graph will represent that time period that is set. The most popular settings are the 1 minute, the 2 minute, the 3 minute, 5 minute, and the daily chart. It is crucial to be in the correct time frame. So you might take a look over on my charts. And when you take a look over on my chart, you might notice right away, I have a 1 minute time frame up and I have a daily time frame up. This, just jumping forward a little bit, is what you always want to have. You always want to have at least a minute chart up and a daily time frame on up. We don't just want to have a 1 minute time frame on up, and we don't just want to have a daily time frame on up. I find that the perfect way to be able to look at your charts is to be able to see one of each. So what's the point of this? Well, let's extend this, make these a little bit bigger so we can be able to break this down in a way you can understand. We know that when I take a look at the daily chart, what is happening on this day within this 1 minute time frame is really what's happening in this one red candle. And we can say to ourselves, what is happening inside this red candle is what is happening right here on this 1 minute time frame. This 1 minute time frame is making up this daily chart. Some people may say, well, I like to use a 2 minute time frame. Does that change anything on the daily chart? No. Hey, I like to use a 3 minute time frame. Does that change anything on the daily chart? No. Hey, I like to use a 5 minute time frame. Does that change anything on the daily chart? No. The daily chart is still always going to be the same because that's going to be what has moved on the day. And the same exact thing when we take a look at the 1 minute time frame, I still know the high of the day is at the price of 412, and I still know the low of the day is at the price of 410.62. If I switch over to a 2 minute time frame, the same thing applies. We still have 412 and we still have 410.62 as the low. I can go over towards a 3 minute time frame and it still applies. We still have 412.85 as the high and we still have 410.62 as the low. I can go to a 5 minute time frame. Time frames aren't going to change the patterns. All they're going to do is going to show each candle represented in a different time frame, which now shows me if I'm in a 5 minute time frame, each one of these candles are 5 minutes. So you can see this candle right here is from 11:15 to 11:20. This one is from 11:15 to 11:20. This one is from 11:10 to 11:15. This one is from 11:05 to 11:10. This one is from 11 o'clock to 11:05, so on and so forth. So now I know the confusing thing starts happening. We start saying, well, why do we have all these different time frames? Why do we need to look at all these different time frames? Well, the reason why we always have the daily chart. The daily chart should always be up every single day, no matter what, is because it truly gives us the history of this play. I could see from here, this current date, all the way back to October. I could see 6 months ago where the SPY was up towards, where it was down to, how we've been moving over the past few days. If we have any uptrends, downtrends, anything along those lines, I like to have my daily chart showing me at least the past 6 months. This just gives me an overall idea on where the S&P 500 has been and what could be coming on up. What's a realistic move on this type of day? Now, I use the 1 minute time frame to be able to get the most detail possible. When I'm in on a 1 minute time frame, I have the most detail. I can see highs, I could see lows. Each one of these candles is represented in 1 minute, and that's absolutely fantastic. As I move back, I slowly lose detail. Okay? So why would we ever not want to be in the most detail possible? Well, the only reason that we probably wouldn't want to be in the most detail possible is because as the day goes on, unless you want to consistently be dragging your chart, across your screen to see the entirety of the day, traders are going to use a very simple process where all they are going to do is as the day goes on, they are going to slightly move back their time frame. And why do we do this? Well, as of now, if I'm in on this 1 minute time frame, I can see it looks like the high of the day is 412.84, and it looks like the low of the day is at 410.63. But I can't see the start of the day. I can only see till 9:49. There's 19 minutes that I can't see at this moment. So what I personally like to do is just say to myself, okay, go to a 2-minute time frame. Now I can see the start of pre-market, I can see the start of the day, and I can get a full overview on the day. What is giving me the most sense and the most clarity? Now, as you can imagine, as the day moves on and 2 minutes starts filling up where I can't see the entirety of the day, then I jump back into a 3-minute chart. So let's think about yesterday. Let's go to a 1-minute time frame and let's scroll back to yesterday. Yesterday, I could be in a 1-minute time frame, and this is my normal setup on how I like my charts, is I have the S&P 500 sitting right here. Okay, I can see this all the way until about 10:50. After we start going past 10:50, and now it's 11 o'clock, now it's 11:30, I could say to myself, okay, hey, the high of the day is at the price of 412. It's not at the price of 412. I scroll back, I can actually see the high of the day was at 412.83. So what's a smarter thing for me to do? Go back into a larger time frame so that I can see the entirety of the whole entire day. So now I can see all the way from the start of the day all the way till about 12:30. But now let's say it's 1 o'clock in the afternoon. Well, I can't see the entirety of the day, so now I scroll on back to about a 3-minute time frame. Now in a 3-minute time frame, I have the most detail possible, and I can see all the way till 2 o'clock. And as you guys guessed it, as we start getting closer to the end of the day, I usually jump back into a 5-minute time frame. So I can see the entirety of the day of what has happened throughout, from the beginning of the day where we were to where we're currently at the end of the day. So the secret is to try to have the most amount of detail as the day progresses. So if you kind of want an easy little cheat sheet on what most traders are going to be doing, is they are going to be in a 1-minute time frame at the start of the day, probably for the first, hour to an hour and a half. So most people probably, let's just say for the first 90 minutes are going to be in the 1-minute time frame. After the first 90 minutes, and I'm just saying 90 minutes because it depends on where you live. For me, I'm East Coast New York time. You could be California, you could be in Europe. After the first 90 minutes, we're going to then probably go for about 2 hours into that 2-minute time frame. So we have our 90 minutes first. Then after that 90-minute period, we're probably going to be for about 2 hours in that 2-hour time frame. After that 2 hours passes, we're probably going to go for the next 2 hours over on that 3-minute time frame. And then we're probably going to go on the last until the end of the day over in the 5-minute time frame. So an easy way to be able to think about it is almost think about it like this. It's all about getting the best sense visually of how this stock looks. If I'm looking over on the S&P 500 right here, okay, this was yesterday on the S&P 500, which is right above me. If I switch over to right here, our 5-minute time frame, and I'm actually going to take a screenshot of this, and let's now go over and let's look at this at a 1-minute time frame. A 1-minute time frame in the afternoon over on the S&P 500, we're a little too zoomed in. I can't see the entirety of the day, and it makes it difficult for me to be able to trade because I feel like I'm missing a lot of information. Let me just ask you, is it easier to see the S&P 500, what it's done on the day, how low it's gone, where it opened, where it closed? Or would it be better just to take a couple steps back and now we can say to ourselves, hey, awesome. Now I have a better visual look of it. I have a better visual look on the 5-minute time frame to see the entire day than just the 1-minute time frame. So I like to just take a few little steps back. The easiest analogy that I have for you guys to be able to understand is everyone grab your cell phone right now. Grab your cell phone, take a look at a text message, and try to read a text message this close to your face. You can't read a text message this close to your face. I have no idea what my phone says right now. I have no idea. But I can read it when I take a little bit of a step back. So when I take a little bit of a step back, it's better clarity. Having a close 24/7 is not good. You might say, oh, closer the more detail, the better. At your certain time periods, yes. But as the day progresses, we take our steps back. We have to find that happy medium at all times. We don't want to be all the way back here as well. This is way too far away. I can't read my text messages either. So we got to find that happy medium. Well, Deck, what would be way too far away? Well, right now, the S&P 500, I really don't want to be in a 5-minute time frame. It wouldn't be wrong to be in a 5-minute time frame, but what would be wrong if I was in a 30-minute time frame right now? 30-minute time frame is me trying to read the cell phone all the way from over here. Guys, I can't see any detail. I have no detail. I don't know, I can't see little shadows. I don't know which way this is going to be going next. So the S&P 500, this is too broad. You know, when you want to go to really big, time frames, it's like, guys, do I have any detail of what's actually happening within this day? Well, if I go to a 2-minute time frame right now, which I should be in, which is my happy medium, I have great detail. Okay, hey, I see the drop. Okay, here I see the spike. Okay, I see the drop. I see a little bit of spike. I see we probably had some action happen right around this area. That's when the president came out and started speaking. So, it's great to be able to be in that correct time frame because it's going to help us become a better trader. The daily chart is always there so we can see the past. The minute chart is all about detail. So do not overthink it. Let's break it down as we always talked about. We always want to be able to have that daily time frame. That daily time frame is going to be showing us the farthest candle to the right. The farthest candle to the right is going to be what the day is actually made up of. We could have our 5-minute time frame, our 2-minute time frame, our 3-minute time frame, and our 1-minute time frame. So I always have 2 charts open on once. One is set for the daily, one is set for the minute. We only adjust the minute chart. We always leave, of course, the daily chart up and open so we could be able to see the previous history of this play. So what is the correct time frame? This is one of the most important questions I'm asked. It's a very simple answer. Use the time frame that you can see the entire day with the most detail. If you can't see the start of the day, go into that higher time frame. What's the best normal schedule? As I said, usually the first hour and a half, 90 minutes being that 1-minute time frame. After that, the next 2 hours being about the 2-minute time frame. After that, the next 2 hours after that, we want to be from the 1 to 3 o'clock into the 3-minute time frame. And then the final hour of the day, we want to be in that 5-minute time frame. Remember, we want to see the most detail while seeing that entire day. It's okay to move into a tighter time frame if you're about to trade a stock. Just make sure where all the hidden support and resistance lines may be. So if you're saying, hey, Deck, I want to jump into a play, does that mean I always have to be in the 2-minute time frame at this time? No, if you want to get a little bit more detail, you know what this chart looks like, you have a mental image of it, switch over to a 1-minute time frame. Get a little bit more detail. Or, hey, Deck, I just want to see what the past looks like yesterday looks like. I'm just going to jump over to a 10-minute time frame, see where the old high of yesterday was, see where the old low of yesterday is, and now jump back into the correct time frame. That's absolutely fine. Hey, Deck, I just want to see what did the past week do. So I just want to take a look at the past week. Let me jump back into a 15-minute time frame. Okay, over the past 15 minutes, I can see we've been downtrending. That might hold up as a resistance line. Yeah, nice resistance, 412.23. Let me again carry that over into my 1-minute time frame right here. It's okay to jump from different time frame to different time frame, but you want to make sure you understand the correct time frame with the most detail so that you guys have the best chance of success.